Welcome back to another video. Soil here, and today I want to talk about true strength indicator, which is a momentum oscillator for effectively evaluating the movements of price action. If you are interested to learn how to use this indicator, stay tuned and let's get started. Alright, here we go. We got true strength indicator here below the chart, and as you can see, it's oscillating above and below the center line, which is 0. This is an unbound oscillator, which means there is no upside or downside limits, as you can see, and the extreme moves depend on the volatility of the market, which I'll explain more about this later in this video when discussing the overbought and oversold conditions. The blue line is true strength line and the red line is the signal line, which is simply an exponential moving average of the true strength line. True strength indicator is based on a double smoothing of price changes, and by doing this I mean double smoothing of price changes. It tries to filter noises and capture the movements of the price action in a more effective way. The formula and calculation of this indicator is a little complex, and I don't intend to get into the calculations in this video because in practice you don't need it and you must learn how to interpret it and use it for trading. Anyway, if you're curious on how it's calculated or you need the formula and calculations for any purpose, just simply search in the Google and you'll find it in many websites. The default settings of true strength indicator on most of trading platforms are 25 for long length, 13 for short length, and 13 for signal length. The default setting usually works well in most of situations, but you can adjust the setting based on the volatility of the market you trade and your trading style and trading system, so it will better match with your whole analytical process. Alright, now let's see how we interpret this indicator and how we can use it for trading. As I've already mentioned, this is a momentum oscillator that moves above and below 0. In other words, it fluctuates in positive and negative areas, and just like other momentum oscillators, being positive or negative gives us the overall picture of the market. As long as it's above 0 and positive, it shows the bulls are in control. In other words, the upside momentum is greater than the downside momentum, and as long as it's negative, it shows that the bears are in control and the downside momentum is greater than the upside momentum. So centerline crossovers can provide us signals on the changes in the direction of the market. But please pay attention that not any centerline crossover is a valid signal, and it can be a false signal, and you must filter the false signals by using this indicator in conjunction with other tools and concepts of technical analysis. The more common signal that traders get from this indicator is the signal line crossover. When the blue line crosses above the red line, it's a buy signal, and when the blue line crosses below the red line, it's a sell signal. But please pay attention that signal line crossovers are very prone to be false signals, and you must filter the signals. For example, only taking buy signals when the overall trend is up, or only taking sell signals when the overall trend is down. To filter out the false signals, signal line crossovers must be used in conjunction with other concepts of technical analysis like trends in this example, or other indicators to reduce the risk of getting caught in false signals. We can also use true strength indicator for identifying overbought and oversold conditions, but please pay attention that unlike other indicators that we use for this purpose, true strength indicator is an unbound oscillator. We don't have any upside or downside limits, so with this indicator, assessment of overbought and oversold conditions are a little subjective. Different assets have different volatilities, so based on the volatility of the asset or the market you trade, by checking its performance in the past, you can find the correct levels that can be considered overbought or oversold. So make sure you check the past performance of the market to discover the correct levels. As I just said, because in this indicator there is no upside or downside limits, the assessment will be subjective in identifying overbought or oversold conditions, and we have better indicators for this purpose like RSI. So I don't recommend to use this indicator for identifying overbought or oversold conditions. A better signal that we can get from this indicator is divergence. A bullish divergence forms when the price makes lower low, but true strength indicator makes higher low, which shows that we have less downside momentum and the upside momentum is gaining strength. This gives us the signal that the current trend is possibly ending and we may have a reversal. Please pay attention that having divergence means that the current trend is weakening. A reversal can happen and the price price may turn to an uptrend like what happened here, or the current trend may end and the price may go to a trading range before proceeding in either direction. So generally, having divergence means weakening of the current trend. And please pay attention that when the trend is strong, we may have a divergence or even some consecutive divergences, but without any ending of the current trend or reversal, and the price keeps going its overall direction. And the divergences may only foreshadow the corrections or pullbacks, and a bearish divergence forms when the price makes higher high but true strength indicator makes lower high, and this shows less upside momentum and indicates that the downside momentum is gaining strength. This gives us the signal that the current trend is weakening and the trend may end, and possibly we may have a reversal. And similar to bullish divergence that I just explained, the divergence doesn't necessarily mean reversal, and when the trend is strong, we can have a divergence but the price continuing its overall direction, and the divergence may only foreshadow the corrections or pullbacks. True strength indicator is a very effective tool for evaluating momentum and identifying changes in the direction of the price, but like any other tools in technical analysis, you should never take your trading decisions only based on this indicator, and you must use it in conjunction with other tools and concepts of technical analysis. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you found any value in this video, please like it, please subscribe to my channel if you haven't already, and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.